Hello, everybody. Thank you for joining us with Barber Academy Episode 8, Crypto Tax Tips with Justin. Justin is the Senior Associate at Founders CPA, specializing in crypto taxes. So, Justin, welcome.
Welcome. Thanks for having me, Ann.
Justin, tell us a little bit about yourself and Founders CPA.
So my background is in computer science and law, and I've been doing crypto taxes for about a year. I've handled anywhere from really small clients to really large clients, and I currently work at Founders CPA, which was founded in 2015 by Kurt Mastio. We offer accounting, tax, and CFO services, and one of our subgroups in tax is digital assets. So we have an entire sub-department that specifically focuses on this area.
Gotcha. So, Justin, I heard that some of your clients also have HNT in your portfolio. Can you tell us a bit more about that?
Yeah, so I've dealt with some clients that, just have invested in H&T. And then on the larger side, I've also dealt with some clients that had some pretty expansive mining operations, and they were going around setting those up all over the place. So I've kind of seen it all. It was pretty fun doing the mining one, as that was a lot of tax planning and tax strategy. So H&T is something I'm definitely familiar with.
Gotcha. Great. And also, I do want to give a quick shout out to Armand, who introduced Founder CPA to us for this episode. And the reason we're doing this episode is that this is kind of the tax filing season, or it's getting to that season. And we do see a lot of people asking HNT or mobile mining related questions on Discord. So we thought, why not find a crypto tax expert and then talk about the questions specifically people have in terms of HNT and other crypto portfolio. So we actually did do a questionnaire and where we received hundreds of responses. And so there are a lot of general as well as more HNT specific questions. So I think what we're going to do today is that we're going to just start with some of the general questions first, and then we're going to move on to some of the more Helium and mobile mining specific questions. Okay, so first question from the questionnaire is, I think this is actually a really good one from one of the users. His question is, if there was one thing that you wish you could tell your clients before they come to you for your service in terms of crypto and taxes, what would that be?
That would be keep an inventory of every exchange and wallet you've ever used. Having to deal with the complications that come from missing an address or not having exchange data is quite painful, especially in regards to higher tax liabilities versus if you had the data. So definitely keep an inventory of everything you do, and that includes your exchanges used, wallets, and even your wallet addresses.
I see, gotcha. Basically, keep a detailed record of all the mining activities and exchanges.
Yep.
Gotcha. Another question that we have collected from the questionnaire, it's actually also a very common, I think this is a very common belief. Many people have asked this, which is, say, I have mined a lot of HNT, say in 2020 or 2021. But since they have been mining, but they haven't sold any or exchanged any, and then all of the mining happens within the Helium wallet, which also does not require KYC. So the belief is that, okay, since I haven't sold any, I don't have to report any taxes on those. And a lot of people haven't. Is that belief correct?
Unfortunately, it is not. It is the taxpayer's responsibility to accurately report their taxes. And mining is a taxable event, and so is selling crypto, especially for other crypto or fiat. And so it's kind of a pain. And there's definitely an iota of truth where if it's non KYC, you can kind of get away with it for a bit longer. But at the end of the day, you're either going to use a KYC on ramp, or eventually, you might be making so much money that the IRS puts together some dots. My recommendation is always just to accurately report your taxes, because interest and penalties add up, and interest adds up since the tax was due. So if that ends up being over like a multi-year span and the IRS, finally audits you, you may owe a ton of money, where had you just paid your taxes, it could be like pennies on the dollars. So definitely, report it and be accurate.
Say that they now realize that they misreporting that, and say either this year that they have sold some HNT or maybe they haven't, but then they plan on selling some in the next 2 years. What do they do from here?
I would recommend getting your crypto taxes completed and then filing some amendments. You may owe some money in like back taxes. But that's a lot better than eventually you selling your crypto and hopefully you're a winner and you make a ton of money. But it's a pretty bright red flag when you go from I've never handled crypto to I've made millions of dollars, and it's very easy for you to be an outlier that way. And then if unfortunately you get audited, the IRS is going to comb through your crypto financials, and it's going to hurt a lot more than just filing some amendments. It's not the end of the world if you don't report taxes that year. I've dealt with clients, actually, most of my clients are in that boat, especially with 2021 being such a great bull year, where clients didn't have 18, 19, or 20 reported. Definitely include those in the data set and just get the amendments filed. One of the dilemmas is if you're not reporting to the IRS, you can't use those holding dates and cost bases. And the goal in most taxpayers is to have long-term gains rather than short. And that, by not reporting your taxes, you're kind of negating your own long-term gains, or you're making yourself out to be a really easy, bright red flag in their auditing system. I know they're made out to be quite a bad guy. Essentially, they're not though. They're just kind of looking for their cut. So you'll have to pay some, fines and penalties and interest. But once the IRS has their cut, they're all settled. They're not looking to come after you. It's, you're a slightly higher audit risk if you amend, but the benefits of not having to deal with an audit multiple years down the road highly outweighs that. So it's definitely a strategy I recommend doing.
Can you expand a little bit into the tax audit? Like you mentioned just now that if people do the amendments, then they're slightly facing a higher tax audit risk.
Yeah, so I don't actually have any concrete numbers. It's kind of more of like human psychology, where if you're submitting an amendment, you're basically saying, hey, look, I missed something. And that gives you to be a little bit brighter of a target compared to someone who doesn't do an amendment. The dilemma is, though, the IRS has 3 to 6 years to generally come and audit you. If they can prove intentional tax fraud, they have unlimited time to audit you. And dealing with an audit is significantly worse than ever having to pay your taxes. I've seen clients pay close to six figures for audits. So, and that's just in, our fees. That doesn't include taxes owed. So it's definitely something you want to avoid at all costs.
Can you maybe go into a more detailed example in terms of the three selling strategies that you talked about? Which one would be the most common and the easiest to deal with?
So the most common and arguably the safest would be FIFO. It is what the IRS recommends on their FAQ. Unfortunately for the IRS, their FAQ isn't binding law, and there is no court cases or IRS rulings out there that state you have to use FIFO. Additionally, there's a good argument that the rest, LIFO, HIFO, and anything like it are a form of spec ID, which the IRS says you can use. And so basically, FIFO is first in, first out. So let's say, you have three mining events, right? And they're all a week apart. And the first one, you get one coin for $1. The next one, you get one coin for $2. And the third one's one coin for $3. The cost-based method will determine which one you're selling. So FIFO is just going to be the first one in. So that'll be lot one. So no matter what you do next, it's going to be lot one. LIFO is the reverse. It will always be lot three in that scenario. And then HIFO is going to pick the one with the highest cost basis, which in this case would be number three. So it's pretty simple in scenarios like that. Where it gets really complicated is when someone's mining and doing other activity on top of it, or trading into HNT on like a separate address. Unfortunately, a lot of these softwares don't separate out your taxes per wallet. They separate it out like per currency. So you could be mining and then trading HNT on an exchange, and the software will say you're selling the mined HNT. So unless you do more manual work or have some more tax planning, you could really mix and match the lots. And my recommendation for someone mining is generally going to be FIFO, because then you only have to wait 366 days for the long-term gains. Where if you pick one of the others, it becomes a lot more complicated on figuring out when that long-term threshold hits.
Okay.
So you can sell your crypto at a loss. You will need to be aware of like there's the economic substance doctrine and the sham transaction doctrine, and there's a few other ones just like that. The rule of thumb with those is basically you need to have a reason for exiting and entering a position besides just reducing your taxes. So if you have a business reason or something else pops up, or if you can think of anything that's just more than I want to have lower taxes, then tax loss harvesting is fine. Alternatively, you can always wait the 30 days. The wash sale doesn't apply to crypto, but those doctrines do, and those are very similar to the wash sale rule, unfortunately. But for someone in this kind of situation, I would recommend doing some tax loss harvesting. Hopefully, their 22 year is at a loss overall, and then they can use that to deduct against income. And then if they have more than 3,000 in losses, they can roll that forward to future years to deduct against future gains or future income, depending on their scenario.
I see. So basically, they have to, if they want to tax loss harvest, they have to sell it. Once they sell it, then they can basically roll it over if it's more than $3,000 of loss.
Yes. Additionally, most people in this position want to re-enter that position because they believe in the coin or it's their long-term gamble. But there's definitely more to it than just selling it and then buying it back like the next minute or something. You definitely need to have a little bit more time in between there and like an actual reason for doing so besides just taxes. Or if it's just taxes, wait 30 days in between selling your coin and rebuying it. There are some tax doctrines. The two main ones are economic substance and sham transaction. And the moral of the story for those is basically if you're doing something to just avoid taxes, the IRS can negate it. This is assuming, of course, you get audited. If you don't get audited, doesn't particularly matter in your situation. Um, but so unlike the wash sale rule, these always apply, and so they still do apply to crypto. So if you're doing something to just avoid taxes, you need to have a reason that is like economical in nature. And this can be, HNT dropped, and then maybe you saw some news and you were really excited and decided you made a mistake and re-entered it. That would be fine. Or if you don't really have a reason and then coming up with one is too much work, you could always just wait 30 days in between. Because what the Congress and IRS has stated is you don't really need one if the wash sale rule applies. So as long as there's 30 days in between, they're not going to ask for one. If it's less than 30 days between exiting and entering, the IRS could potentially bring up those doctrines to apply something similar to the wash sale rule. They may not, but it's always something to keep in mind.
Given the situation this year, like all the news that happened, um, what kind of tax advice would you give people? Like going forward, do you see more crackdowns, or how do you think this is going to play out?
So I think the IRS right now is pretty lenient, especially if you haven't reported taxes and you're doing some amendments. I think they're going to become a bit more stricter in the future, probably in terms of like 5 to 10 years. Unfortunately, with the lack of like guidance and rules um, in law or in court cases, the IRS doesn't have a lot of teeth yet. But I think as those get made, the IRS will, and then they'll start to use those. I also think we're going to see a lot of crypto audits in the future years as more exchanges are giving IRS data through like KYC programs. So I think the biggest red flag you can set yourself up for is, buying or selling on like Coinbase, right? Not buying, like selling or trading crypto and then not reporting that activity. Because eventually the IRS is going to see that and know that you messed up your tax return. And that's just probably at some point just going to be an automatic audit. Granted, it does matter on like the dollar amounts, right? If we're talking $2, it's not worth the IRS's time. So that's always something to keep in consideration, the scale of things. So I think most people either need to learn a lot about crypto taxes this year and kind of get on like a better schedule of making this a yearly thing, like normal taxes, or it's your time to exit. If this is too much and it's not worth all the hassle, just wait it out and hopefully it's less of a hassle in the future.
Gotcha. It does sound like now is the best time to really do the homework and get everything done correct.
Mhm. One thing to keep in mind for taxpayers is as frightening as this all is to you, it is to IRS auditors as well. There aren't as many people you think that have really deep experience when it comes to crypto and crypto auditing. So kind of just doing the best you can and just being, honest and doing it in good faith will 99% of the time likely not land you in trouble.
In 2022, they launched the mobile token, and it has been more than 100 days when mobile genesis started. So essentially, there are airdrops every single day, and I see a lot of debates on Discord regarding whether there is anything to report on these airdrops tokens. So one argument is that since this is an airdrops token and it's not really listed by Binance or Coinbase, so there is really no value. But then some other argument out there is that because it is treated in Telegram groups and people do trade these coins between themselves, there is a fair market value to these coins. How would you advise on this one?
So, unfortunately, this is definitely a mining event and this is taxable. Sounds like the key takeaway is that there is no price oracle to use. So, it's not like you can just plug it into a software and it shoots out a number for you. Here, though, there is an ascension of wealth, and that's kind of what the IRS is going to look for. If you have an ascension of wealth, you owe them taxes. Unfortunately, the question is on what, right? So I would pick like a nominal value, and that can be a penny or a dollar per mining event. So if you're getting, airdrops once a day, then maybe you owe taxes on $1 a day. And then you can assign that, penny cost basis to that tax lot. This way, you kind of done the best you could. This thing really doesn't have a value. So you're just giving it something nominal because clearly it's between, 0 and probably a penny, right? It's hard to say a crypto is worthless, but it can definitely be sub 1 cent. So I would just round up to that and use that for the tax lot. That way, if you ever get audited, you can tell the IRS you did the best you absolutely could. There's no price oracles. The IRS isn't likely going to refute that. So you'd be pretty safe with that strategy.
Okay. I think this is really helpful advice. I actually am not familiar with the term nominal value, and also because there are people trade these coins on a daily basis, and its value changes a lot. Are you saying that they don't necessarily have to go into the Telegram groups and look up the time of the day it's traded at, but just basically arbitrarily give a very low value themselves and be done with it?
Correct. So when there's not like a big market out there, there's not really going to be anyone out there that can say, this crypto is worth X. I mean, with Ethereum and Bitcoin, there's so much liquidity out there that you can easily point to a price range, right? It's between these two numbers. It sounds like with mobile, there's not enough trading activity to be able to do that. So the only thing you can say is it's worth something, but who knows what that number is. So pick something nominal. And so nominal is just going to be like your default, and you can set that to a penny or a dollar. You can make it $100 if you want to. Most clients generally stick to somewhere between a penny and a dollar, as that's what they're comfortable with, and then stick with that. So if you set it to a penny, just stay with a penny as your nominal default for similar situations in the future.
So that penny, is that the daily value that they have out of however many coins they're mining, the daily.
Correct. So if you're mining a million coins, your actual price per coin will be a penny over a million, which is going to be a really small number. So that way, you're paying taxes, you're doing the best you can, and it still won't hurt you because hopefully you only owe taxes on a few dollars. The only caveat there is you should be checking price oracles, and that can be like a CoinGecko or a Coin Market Cap, as in you're not going to want to put a penny once one of these things exists. And so if that's going to happen soon, you're going to be stuck using the price oracle. But prior to that existing, you can definitely stick with the nominal value. Because essentially when you sell the token, right, let's say it's $10 eventually when you sell it, you're going to have almost a 100% capital gain. And so then the IRS will just get their cut then.
Do you have any recommendations in terms of what kind of software to use when it comes to crypto tax reporting? And also for your clients that do have HNT in their portfolio, what kind of software would you recommend them specifically using for tracking HNT?
So my favorite two softwares are coin tracking and crypto tax calculator. If you're specifically using HNT, I would recommend coin tracking as there is a tool out there called fairspot.host. This tool allows you to enter your wallet address and it exports your data in a coin tracking format. So that makes using coin tracking really simple compared to, say, like crypto tax calculator. If you had to use Fairspot with CTC, some manual editing on your side would be necessary. But overall, CTC is probably my favorite software. I've interacted with their owners and some of the higher ups before, and they are really good at um, dealing with like account and feedback. So a lot of the new features that you see, if you ever sign up for their newsletter, are things that people in the community have recommended. So they're very open to recommendations and actually making those happen. So I'm really hoping for big things for them. And then coin tracking has just sort of been like a tax stable over the years. I think it's one of the first. It works, and it's definitely usable.
Is there a limit on how many softwares that you can use for your tax preparation per year?
No, the only thing you'll have to keep in mind is these softwares generate something called a closing report. And so this closing report is going to be everything that you still have in your inventory in like the different tax lots. So like say you have one ETH, right? But if you bought ETH 20 times, there should be like 20 tax lots essentially. And so this report will have that with each date, volume and your cost basis. And so to swap between softwares, you just have to edit that report into the software's format. However, one of the things to keep in mind is unfortunately not every tax software provides this report. So like a big example there is Coinly. Coinly doesn't have that. So if you wanted to swap from Coinly to say coin tracking, you would be stuck redoing all of your data set. Versus if you wanted to do Coinly or coin tracking in 21 to crypto tax calculator in 22, you could very easily and cheaply accomplish that goal.
Right. So I think that's probably where people wonder, like, do I just stick always with one software? And before I start, I better be very sure that this software is gonna cover all of my needs, even if I don't have it now, I might have it a couple years down the line.
Yeah, so I would definitely do a lot of research into the various softwares. Unfortunately, some are much better than others. And there's a lot to learn when using a software. Each kind of has their own little like tricks that you need to learn to make things happen. So it's definitely going to be a lot easier for an individual to just pick one and master it than try and use a new one every year. So that would be my recommendation.
Got it. Is there anything that we haven't covered that you really wanted to talk about?
Um, no, I think you've covered everything. And, my first recommendation, and I'll keep repeating it, is keep an inventory of everything you do. Basically, I like to refer to crypto taxes as like a giant puzzle. And so if you don't have a wallet or exchange, it's like you're missing one of the edges. And so that kind of makes it almost impossible to know if it's complete. So by having just the edge pieces, which is your exchange data and your wallet addresses, you make it possible for someone like me to be able to come in and actually build the entire thing. So that is always going to be my recommendation.
Got it. Well, thank you so much, Justin, for your very valuable insight, and this is certainly very informative for me as well. Do you have any final tips before we wrap this episode?
Um, Founders offers free consultations. So if anyone has a very complicated tax situation or they're dealing with big numbers, feel free to reach out to us. Our consultations are 15 to 30 minutes and they cost you nothing. So my recommendation, even if you don't go with us, is to get a tax advisor. Unfortunately, most things in crypto are very gray zoned. There's not a lot of clarity. So just by getting some good professional help, you could save yourself a lot of issues.
Great. We'll put the link in the description.
Awesome. Thank you.
Well, thank you so much, Justin, for joining this episode. Hopefully, we can do it again sometime.
Yeah, thank you so much, Anne. I really appreciate it.